Hey, this is Matt from InvestiQuant. Today is Tuesday, October 6th, 2020. And this morning, I want to show you one of our bias alerts that will be potentially set up, but we'll dig into the settings here regardless and make it a little bit more applicable for today. So what I've done is I've clicked on the alerts section here. And then in the bias alerts, these are alerts that we put in here on a daily basis based upon some patterns that are either noteworthy or statistically significant that give you some ideas to look at. We've also got a couple other buttons. My alerts for anything that you save, strategies that you create and save will show up in your My Alerts section. And then IQ alerts are for some trades that we have put in here. These are day trades with stops and targets. In fact, we've got one that looks pretty likely to trigger this morning if we gap up, which would be a gap fade trade. It's got about a 70% win rate. It's got a really nice average trade along with it. You can see some more of the stats here, but this one will likely be triggering this morning if we gap up for a gap fill trade. So it'll be targeting the prior day close. But what I want to show you this morning is in the bias alerts, and we're going to dig into one for the ES. So I'm going to come to the instrument. We've got a bunch of these in here. There's lots of ideas to work with. So I'm going to select the ES setup. I'm going to go intraday open. And this very first one that shows up, short bias, multiple unfilled gaps. I'm going to go ahead and click on this to load it into Discover. And this one is based upon gapping up after an unfilled down gap followed by an unfilled up gap. So that's what's happened here. The past couple days, we had an unfilled down gap on Friday, and then yesterday we gapped up and pushed higher, leaving us an unfilled up gap. And these stats are based upon gapping up the next day. I don't know if we're going to be gapping up this morning or not. We're trading around the prior day closing price, so it could go either way. But what I figured I'd do is I would take this bias that comes straight from the bias alerts and then add some more context around it to make it a little bit more like today's setup, and then we'll take a look at it. So I'm going to go into indicators. I'm going to add a couple moving averages to it. I'm going to say that it is above a 10-day moving average, above a 200-day moving average. And then I'm going to go into opening filters, and instead of gapping up, I'm just going to say open in the prior day range, so up or down, but it needs to be below yesterday's high, but above yesterday's low. So right now, the only one that would really be at risk, I think, as of the time of this recording, would be opening above the prior day high. We're not too far from that, but if we open within prior day range, then this opening filter would be applicable. And lastly, I'm just going to go up and add the other instruments to it while we're here. So let me click NASDAQ, Dow, and Russell, and then hit View Results. And here we go. So these are the results of going long at the open, which is 9:30 a.m. Eastern Time, exiting at the close, which is 4:15 p.m. Eastern Time, when opening within the prior day range, when the prior day was an up gap that did not fill, and the day before that was a down gap that did not fill. This is taking place above a 10 and a 200-day moving average. And for those of you that aren't familiar with what we're using as a filled gap, that means it is trading back to the prior day's closing price. So there's a couple different definitions for that, but we're using trading back to the prior day's closing price to determine if a gap is filled or not. So historically, this pattern, dating back to 2003, has happened 52 times in the S&P, 41 times in the NASDAQ, 36 times in the Dow, and 31 times in the Russell. And looking at the win rates on these for holding all day, the S&P is weak at 40%, the Dow a little bit weak at 44%. The YM and the Russell are more neutral here. So YM 50% win rate and the Dow 48% win rate. Looking at the average win and average loss, they're pretty similar on most of these. It looks like the NASDAQ's a little bit more skewed to larger average losses. But with the ES, they're fairly close for the average win and average loss. On the Dow, they're fairly close as well. Average win a little bit bigger than the average loss. And then on the Russell, same deal. Average win a little bit bigger than the average loss. And lastly, let's take a quick look at the results distribution. I've got the S&P loaded here. You can see the results distribution. We've got 0 dead center here. We've got 1 standard deviation from the average trade highlighted in blue. And it looks like the most common result is going to be this really small loss or a smallish sized winner. So this would be about plus 6 points in the S&P. And we've got a good amount of grouping happening here within the one standard deviation. Not a ton of outliers on either side. We do have, looks like we've got one on each side, but it looks like there's a couple taller bars with the medium-sized losses here on the downside. Not as many on the upside. But hopefully you found that helpful. Good luck today, and we'll see you next time.